Have you ever entered a trade, seen the market turn against you, and found yourself paralyzed, unsure whether to exit? Or worse, exited too early and missed the best part of the move? This has a name: lack of a plan. And today we're going to solve that. I'm Vermillion, part of the Zero Markets team. And in this video, I'm going to show you how to intelligently use stop loss and take profit, two tools every trader needs to master to survive in the market. And if this topic resonates with you, make sure to like the video, subscribe to Zero Markets channel, and activate the notification bell. Here we discuss the market with clarity. No shortcuts, no beating around the bush. To begin, what are stop loss and take profit? Stop loss is a preset price at which you accept closing a position to limit a potential loss. It acts as a safety net, guaranteeing exits on favorable price movements. It is your line of defense. Take profit is a predetermined price level at which you close a position to secure profits. It's your finish line, ensuring you lock in gains before the market reverses. Think of a car journey. The stop loss is the emergency brake. The take profit is the final destination. Without these two references, you might drive in circles or crash at the first turn. So why do most people use them incorrectly? Many traders enter a position focused only on potential gains, and they forget to calculate the risk. Others set their stop too tightly, leading to premature exits due to normal market fluctuations. A common and often disastrous mistake is moving the stop loss further down, hoping for a recovery which can turn a small loss into a major one. Now, how to define stop loss strategically. Your stop loss should be technical, not emotional. Again, I'll repeat that. Your stop loss should be technical, not emotional. Base it on the chart, not on the amount you're willing to lose. For example, if you're long on a futures contract and you see strong support 20 points below, that's a good technical point for a stop. Placing it just 10 points below because you want to lose less is ineffective, as the market doesn't conform to your desires. Number two, calculate risk based on position size. If your capital is $5,000 and your maximum loss per trade is 1%, or $50, and your technical stop is 25 points, you can trade a maximum of 2 mini-dollar contracts. This keeps your risk within limits and adheres to your plan. Okay, so how to define take profit intelligently? Your take profit should be consistent with your risk appetite. If your risk is 1 unit, aim for at least 1.5 or 2 units in return. Use a minimum risk to reward ratio of 1 to 1.5. For example, if your stop is 30 points below your entry, target should be at least 45 points above. This creates healthy symmetry, allowing you to profit even if you win less than half of your trades. Number two, consider partial profits at intermediate targets. You can split your take profit into two parts. Realize partial profits at the first objective, then move the stop loss to break even for the remaining position. For example, if you entered a mini index trade with a final target of 1,000 points, you could realize half at 500 points and move your stop to the entry point. This protects your gains and allows you to potentially ride the rest of the movement. Take a look at common mistakes when using stop and take. Placing random stops, such as near zero, not respecting the stop and manually canceling it, setting the take profit exceedingly high due to greed, not adapting levels to the specific asset traded. Example, stocks differ from indices, which differ from crypto. How to practice this? Use a demo account or simulation to practice setting entry point, stop loss, and take profit based on technical analysis. Keep a trading journal to record your operations. Review how often the market hit your stop and whether it was technically sound. The goal is to make this a reflex, trading with a plan, not improvising. Stop loss and take profit are not mere technical details. They are the core of your strategy. Learn to use them as tools for discipline and consistency. Over time, you're going to realize they save you much more than they limit you. If this video helped you understand how to use stop and take intelligently, please like it below, subscribe to Zero Markets channel, and activate the notification bell. And comment below, have you ever been stopped out unnecessarily or failed to realize profit and watched it all reverse? Share your story.